S&P 500 Index, SPX, Long-Term Chart Analysis. Last week's overview. In our previous analysis, we noted seeing the S&P 500 fall by minus 4.25% in a single week from all-time highs is quite surprising. This mirrors the early August sell-off, which had significant breadth. This week's analysis. The recent market volatility is atypical and challenging to navigate successfully. Despite this, it appears that the stock market is resolving this volatility with an upward trend, and we maintain a bullish stance. The 200-day moving average line halted the selling pressure in early August. Conservative S&P 500 strategy. The conservative S&P 500 strategy is tailored to shield investors from bear markets. Short-term declines are tolerated and should not prompt sell signals. In contrast, the aggressive report closely monitors short-term indicators. The conservative strategy relies on long-term chart analysis and remains unaffected by emotions or news events. This strategy is designed for the long haul, allowing for market fluctuations without attempting to time every minor movement. We are currently in a bullish position in the RIDEX S&P 500 Nova Fund, RYNVX, or other S&P 500 index funds or ETFs such as SPY. Current S&P 500 Index, SPX, chart analysis. Last week's overview. It feels like deja vu with the S&P 500 Index, SPX, nearing new highs, market breadth at new highs, and then a sudden sell-off with no apparent reason. The early August dip was termed a crash, but the early September drop, though equally severe, lacks a definitive label. This week's analysis. This week, the S&P 500 Index, SPX, surged plus 4.1% in just 3 days, contrasting sharply with the minus 4.1% decline over the previous 4 days. Such volatility is nearly impossible to time or trade effectively. Attempting to do so would likely result in buying at the peak and selling at the trough. Despite the volatility, the SPX remains bullish. We view the recent rally as potentially breaking out to the upside, especially with the likelihood of rate cuts by the Federal Reserve in the near future. Last week's Consumer Price Index, CPI, report showed a slowdown to 2.5%, initially alarming investors who then questioned the anticipated rate cuts amid declining inflation. The annual inflation rate in the U.S. slowed for the 5th consecutive month to 2.5% in August, the lowest since February 2021. And below market expectations of 2.6%. Annual core inflation steadied at a 3-year low of 3.2%, although the monthly rate edged up to 0.3%, above forecasts of 0.2%. The Fed appears to be behind in cutting rates, and the need to catch up may result in the 0.5% rate cut the stock market desires. After a brief sell-off on Wednesday morning, stocks reversed course midday and rallied, gaining plus 4.1% over 3 days. Investors now see a 0.5% rate cut as the most likely course of action for Fed Chair Jerome Powell. The expectation of a larger rate cut is likely to continue driving stock prices higher. The SPX is on the brink of breaking out to new highs. Economic concerns. Significant economic challenges loom on the horizon. Gross interest on U.S. debt has now surpassed spending on defense, income security, health, veterans benefits, and Medicare, making it the second largest expenditure of the U.S. government, second only to Social Security, which is approximately $1.5 trillion annually. This implies that interest expenses may soon overtake Social Security spending, becoming the largest government outlay by late 2024 or early 2025. In August, U.S. businesses added just 99,000 new jobs, the smallest increase since 2021, indicating a rapidly cooling labor market. The job market's downward trend has resulted in slower than normal hiring following 2 years of significant growth, said Naila Richardson, chief economist at ADP. Economists surveyed by the Wall Street Journal had predicted a gain of 140,000 jobs. Market indicators and reports. U.S. consumer inflation expectations for the year ahead remained steady at 3% in August 2024. The Manheim Used Vehicle Value Index rose 1.2% month-over-month in August 2024. The NFIB Small Business Optimism Index decreased to 91.2 in August 2024, the lowest in 3 months, compared to 93.7 in July. The average contract interest rate for 30-year fixed-rate mortgages declined by 14 basis points to 6.29%, the lowest since February 2023. The University of Michigan Consumer Sentiment Index increased to 69 in September, the highest since May, surpassing forecasts. Conclusion: our stance on the SPX remains bullish. Aggressive traders should consider positions in the RIDEX Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs such as SPY.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.